If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
Okay, Emily Evans, thanks for joining as a guest host today. Marcus is off enjoying some much-needed vacation on a beach somewhere.
Good for him.
And you're filling in. I really appreciate it.
Glad to be here, as always.
Fresh from the DMV. So hopefully you survive that okay.
Yeah, boy, nothing like getting your chip for your driver's license.
Yes.
I'm overdue. Yeah. I think I was supposed to do this 3 or 4 years ago.
Yes, yes. Okay, so a lot going on in the world today. Let's dig into the stories. So we're going to start with the economy, like we normally do.
Yeah.
And so the first story here from the Wall Street Journal, unemployed Americans are enduring longer job searches in a cooling market. So this is the continuing unemployment. So after the initial, you sort of refile. I sort of pulled this out because I think this is actually a better signal about the health of the economy than the initial unemployment claims, which is the higher, we'll talk about that in a minute actually, but the higher kind of bigger headline is usually on the initial claims. But when people can't find a job after that initial period is when I think that becomes to be a problem.
Yeah.
And so we're seeing, for those of you listening and not watching on YouTube, first of all, it's much more exciting to see my pretty face on YouTube. We're looking at the Wall Street Journal here. There's a good chart about the number of people unemployed for at least 27 weeks. And of course, COVID is a big outlier there, but it's creeping up in a way that's, we haven't seen since 2017 if you take COVID out.
Right. Yeah. And I have a lot of questions about this because as the stock market behaves the way it is, it sees something, right? It's counting on something 12, 18 months from now happening.
Yeah.
And we had a good earnings season.
Yeah.
Which may be because some people lost their jobs, right? We got those SG&A lines under control. So one of my questions about the unemployment situation is how much of it is reshuffling of people in and out of different industries? Healthcare employment has declined fairly precipitously. Like I haven't really seen in a very, very long time, beginning around the first of the early 2024, but really taking off in April, May of 2025, really declining then. So where are those people going? Why aren't they needed? Are they going into other things? So there could be just a reshuffling going on here, but there could also be more systemic and secular. We probably need more information.
Yeah, I don't think we know, but I'm watching this because I think the healthy turnover where you lose your job, maybe you're on unemployment for 8 weeks, and then you find a new job. That's how it's supposed to work. If you're out of work for more than 27 weeks, that's 6 months.
Yeah, unless there is some sort of secular shift, like healthcare is no longer going to be the driver. I'm just using an example. No longer going to be the driver of employment because there's this huge withdrawal of federal funding for it. All right, those people have to go somewhere, and maybe some of them are being displaced by automation, but they're going to go somewhere. And if you have to reskill or you have to move, it is going to take more than 27 weeks. That's the optimistic view, I think. But that's a question I have.
Yeah. So to me, this is the one to watch. Like if the long-term unemployed grows too much, that's really negative for the overall economy.
Yes.
But you're right. The stock market is not worried about that right now.
No, they're not. And I suspect that's what it's telling us is they don't need to be worried about it. And the bond market, it has not been acting like a recession is coming. Yeah. The last couple of days have been a little bit more like that story in anticipation of cuts. But the bond market hasn't said, oh yeah, we've got a recession coming.
Yeah.
You don't see that at
Yeah,
all.
I think there might be a secular shift in kind of the share of corporate earnings but shared between capital, CapEx,
that could be.
and human labor.
Yeah, that could be.
We're getting more productive on a per person basis with technology, but I think we need fewer people in general.
Yeah.
I mean, it depends on the industry, of course, but I think in every industry, it's you're getting more productivity out of fewer people.
Yeah, if you do it right, you have, one primary wage earner in every household, if you do it right. And then you might have a secondary wage earner or a non-wage earner doing other things for which she is not paid. But if you do it right, that's what you want. Obviously, those things being optional, not required. But if you do it, if you can run productivity up high, and salaries and wages can reflect that increased productivity, then you get a nice big wage boost.
Right.
That's what you want.
But there may be a time of transition.
Yes, and capital is known to capture those earnings, capture that delta between those two, and not be as generous as it should be.
Yes,
but there's ways to address that too.
Yeah. So I intentionally wanted to start with a different labor topic than the next one we have, which is Trump was really frustrated with the Bureau of Labor Statistics on Friday, Saturday, Sunday.
Yeah,
welcome story
to the
here
club.
From the Wall Street Journal. Trump sees a bigger overhaul at Labor Statistics Bureau. Yeah, I agree. People have been talking about this for years. Yeah. Trump just turned to it. He has a bigger microphone than a lot of us, and so
and I'm shocked at people who are like, "Oh, what? There's gambling going on in here." It's been a problem for an acute problem, meaning an obvious problem, for 3 years. Okay,
yeah. Ever since COVID, something has not been working well.
Yeah, and when you look at and you have, Wall Street sort of figures it out on its own, but when you have the kind of revisions that you've had since COVID, you should be saying, all right, how should we do this differently?
Yeah.
The way we invented in the 30s and 40s, is that really getting the job done? And we didn't, and that got the president's attention, and he responded to it.
Yeah. And so the next story in the Times, they did a good job of showing graphically this chart we're looking at here. It's the difference between the first estimate and the third. So the way it works is an estimate comes out in, say, now for the month of July, and then they'll update that next month and the following month. And so the Times here is showing there's been different periods of time when it has run consistently for a period of time, overestimating recently, the first estimate has been too high, and then they've had to revise downward.
Yeah.
That's what has been happening most recently. And then in the really after COVID and sometimes before COVID, there were times when they underestimated and had to add.
Right.
And so there's a lot of revisions, pretty consistently being revised.
Yeah, and they're large. Really, since COVID, they're big revisions, and a lot of them, and that's not what you want to see in government statistics. And it's unfortunate that this was played as Donald Trump wasn't happy with the number, and he fired the head statistician, because what everybody should be asking is, why is this so inaccurate? What's happened here? And I think the answer probably lies in the survey methodology. It definitely lies in the way they measure state and local government employment, which I was watching that throughout 23 and 24 in particular, and going, this is really bizarre, these big jumps in state and local employment. You see jumps in state and local, they're not even jumps, right? State and local employment is so huge, you just don't see jumps. But you would see these increases outside of the months, the spring months and summer, which is when budgets kind of get reset.
Yeah, right.
And I was like, That's weird. Why would that happen? And one of the flaws, I think, of the system is they apparently use their own model for state and local and government estimates of employment, and not the survey data. So they don't call up governments and say, how many people do you have working there?
Yeah, and I think whether you like the results or don't like the results, I think it's clear the results are not as accurate as we need them to be.
Yeah.
But at the same time, there's a lot of Wall Street firms that have these figures as key inputs into their models, into their valuation models, their macro models, every model.
These are our healthcare employment, because healthcare is a very unproductive field. You have to have people giving care. Ultimately, it's very unproductive, and it's highly regulated.
Yeah, so, I might say it's very labor intensive. I guess it's unproductive.
It's got a low productivity ratio.
Yeah, okay.
Sorry.
Yeah, we use a lot of people for the output.
You need a lot of people for the output, and so we look at that that employment number.
It's a really important number.
Yeah, to tell us what's going on in healthcare in terms of demand for services. And so if that number's not accurate, then we can't accurately assess what's going on in demand for services, which we need to do our jobs.
And these should be, I mean, there are facts somewhere here. Like there are a number of people that work for the state of Tennessee and work for the, metro government here in Nashville. They get paid every Friday or whatever they get paid. That should be something that is knowable.
It is knowable. And that's the point, I think, which is there another way? ADP keeps track of this through payrolls. Yeah. Okay. Is there another way to do this job? And I think the answer is yes. And I think that's kind of the response to this kerfuffle, which is, maybe, the president should have not said what he said, which is a refrain we can repeat, for the next 3.5 years. But the problem still remains, which is it's not a number you can count on.
Yeah. I think a lot of things with the Trump administration, I don't really like the style that the message was delivered in. Yeah. Or the wording that was used, but the core concept, I think, does make sense.
This is the eternal struggle of analysts like me, is that you have to, and then you have to go to parties and say, oh, well, he didn't say that. He said, and then everybody gets mad at you.
Yeah. Okay, so the Wall Street Journal had a good story about earning more but in worse shape. Hardship overwhelms many American families. They went to upstate New York and talked to a couple different families. The first one is a woman. She has 3 children, and she earns $37,500 a year.
Yikes! Yeah.
Which is above the poverty line. She's not actually below the poverty line, but it's not very much money to manage all the expenses that she has. And I thought the Journal did a good job. We talk a lot about the K-shaped economy, but it makes a difference when you actually interview the real people that are doing, whatever work they can do to make money. Yeah. And they don't have the education that you and I have, don't have the opportunities, and they're doing the best they can. I'm concerned about this part of the K, the lower part of the K. So I was happy that the Journal followed it. I want to keep covering it.
Yeah, and the bottom part of this is the story of the American economy for the last 30 years. Is the number of people at the bottom of the K has gotten bigger, right? And the people at the top have gotten smaller. Less this, and that is when we talk about the structural inequities in the economy. That's what we're talking about, and this is what I think the president is getting to with the tariff question, and among other things, is like, right. Are we? Why are these people in upstate New York not working at the Corning glass plant like they did 30 years ago? Right. That's probably a bad example because Corning still makes a lot of.
And Apple just did a thing where they're trying to bring business to them.
And that Corning makes a lot of their glass. Yeah. But maybe that's a bad example. But you get the idea is that there's a.
Yeah. So in the story, Felicia Allen, 39-year-old nursing assistant. So she's working at
healthcare,
Wilson Medical Center near Binghamton, New York. I actually have a fraternity member that lives in Binghamton. She makes $20 an hour and then got a raise to $22.90 last year.
Mm-hmm.
And she has 4 children.
Right.
And when you read her story, which I recommend people listening we'll have the link in the show notes, should read it. She works the night shift. She comes home and then she has to get her older kids to school, take care of the younger ones. I read through her day. There's no time for sleep in the day.
Not, yeah.
She's like stealing a nap when her 3-year-old is napping. It's a really hard life for a nursing assistant. So this is a healthcare worker,
Right.
and she doesn't have enough money, even though she's working really hard.
Yeah, and if I were to roll back the clock 40 years, what would she be doing? She wouldn't be working in healthcare. Healthcare's become the default employer in a lot of communities, and because it's very labor intensive, it's sort of a sustenance existence, in a lot of communities, and one of I think the questions is, okay, if I rolled back the clock 40 years, would she be working in a manufacturing plant or some other job that had better wages relative to the cost of living?
Yeah, that's the thing, is the cost of living, inflation, and the cost of living has gone up
and wages
faster than wages have.
And in particular, and I think one of the most depressing charts I have is of the average hourly wage in healthcare versus the number of people employed in healthcare. So people came into healthcare as an employment option. Really, there's 3 I call them the 3 epochs of healthcare, but the COVID being one, which we'll set aside. Okay. The other being 2010, 2014, when the Affordable Care Act was implemented. And when you see the employment chart going up, more and more people are coming into that sector, but the hourly wage numbers flat for all practical purposes.
So we brought in many more people, but we're paying each person the same, even though inflation over that time period has gone up dramatically.
So we had more demand for those people. That's why we hired them.
Yeah.
Right. Or another alternative, and I'm beginning to think this is as much as it is or that we regulated healthcare in such a way that we never allowed it to become productive and therefore never allowed it to pay.
Yeah, that's what maybe some of both. But
maybe some of both. But it's depressing. It's like there's no future working in the low wage areas of healthcare, even though we demand more and more people work in it until very recently.
Yeah. Well, so we're going to keep covering the bottom part of the K because I think it's important to follow. A Biden appointee, Adrienne Kugler, has only been on the Fed governor board for a couple of years, but she was filling in for someone. So her term was going to end, I think, next year, maybe end of this year. But she left early. And so Trump has an open seat now that he can fill. And there's a lot of speculation that he might fill it with the heir apparent that could become the next chair.
I think that's the game plan, yeah.
Yeah. And so that is interesting. And we'll see who he names, and it'll be...
I haven't. I know most people don't enjoy this as much as I do, but I am kind of enjoying the throwdown between Jay Powell and Donald Trump. It's somewhat entertaining.
It is somewhat entertaining, but it's having not a good effect on policy. I mean, I think Trump is beating on the Fed to cut rates, and Powell's response is to actually hold off from cutting just to dig his heels in and prove that he's not bending.
Yeah, well, they're both. It's a very childish debate. We can agree on that, okay? But we can also agree that Jay Powell's record is not particularly good here. He missed inflation in 22. He got that whole transitory thing wrong.
Yeah.
We knew it wasn't transitory. Wall Street knew it wasn't transitory. Yeah. There were thousands of people literally saying, "Are you crazy? This is not transitory." But that's what the White House was saying. So he said it too. And then he cut rates right before the election. He shouldn't have done that because it wasn't transitory. It was still kind of, getting worked out. And now he won't raise rates. So it looks like he's acting.
I think he should cut. So I mean, last summer, my recollection is he didn't cut in July, and then we had a problem in Japan, and it was almost like a credit crisis internationally.
Yeah.
And he had to do a double 50-point basis cut in September to sort of catch up,
Right.
which also was before the election. And
Right,
so it
right
helped
before
the
the election.
Democrats, although it didn't matter.
Yeah.
And he's, I think, repeating the exact same mistakes for different details, but he's going to have to cut in the fall.
I think that Scott Bessent's right. Okay, you spend a lot of money every year. You have a lot of economists working there. You should get it righter than anybody.
Yeah.
And you're not. And it is because the Fed, and you got to go back to the beginning of the time when the Federal Reserve was created, because banks like the Morgan Bank, for example, had this crazy amount of influence over public policy.
Yeah.
And not only that, they have this crazy amount of influence over foreign policy. They're lending money to countries that aren't necessarily aligned with U.S. interests, just because they need money.
Yeah.
Germany being a good
Yeah,
example of
right.
that. And so that's why the Fed actually came into being, is to create this sort of neutral institution, for that, that would be a U.S. institution and not a global bank. But I think for a while they probably did a decent job, but since at least the 80s, maybe the 90s, but definitely at least the 80s, it's been a highly politicized operation.
Yeah. And then I have this story about how a New York suburb, they're talking about New Rochelle, which is right outside the city, is managing to bring its rents down. It's doing that by encouraging development of new housing projects.
Right.
And I pulled this out because I think it's important to, we talk about the lower part of the K. We need to create housing for people that's more affordable, because that's a big aspect of their cost.
Yeah, and a really, really good start would be a healthy monetary policy.
Yeah, because that would go to building and everything.
Well, one of the we're going to talk about this in a few minutes. If your economy is almost entirely asset based, which is really true, or asset manipulation, asset movement, capital movement, which is, if you look at the last 30 years outside of healthcare, that's a lot of it. That's real estate development, commercial and residential, for example. And when you make that, where all the 1%'s monies go, you distort things. Housing is not supposed to be as expensive as it is relative to wages. Now, I think New Rochelle's making a mistake there, because the real answer is not trying to get your rents down, because a decline in rents overall means your asset takes a hit, right?
Well, they're creating a lot more units.
Right. Okay. So
there's more tax base, I think.
If you have an apartment building here, and you build a new apartment building here, okay, and you use tax incentives or whatever, all right, and each apartment here rents for $100 a month. These we're renting for $200 a month. What are they going to do?
They'll all be 100.
They'll all be 100, or they'll be 150. But so you're diminishing the value of the capital invested in apartment building A, for the benefit of people moving into apartment building B.
You're not making the whole pie bigger?
You could, but one of the mistakes people make when they think about supply and demand of housing is that people do not observe the arbitrary borders of New Rochelle or Nashville and Davidson County. They can choose to live in Nashville and Davidson County, or in Williamson County, or Wilson County, or wherever, and then drive their car. So they think of the market.
Yeah, so they can live in Queens or New Rochelle or wherever.
They don't think of the market as, what does it cost to live in New Rochelle? They think of the market as, what does it cost to live within reasonable proximity to my office, wherever that may be. So it's a mistake, and we're making it here in Nashville, I think, because the answer is drive wages up. Because if you drive wages up, if people are making more money, then the question of the cost of housing becomes much less of a concern. And that's back to all those people in healthcare.
Yeah,
you know,
right.
They have not seen any wage appreciation. And then they got walloped by Jay Powell's failure to act
with the inflation.
On inflation. And I get back to it almost every single time. It's this is a housing shortage is a wage issue more than it is a supply and demand issue.
Okay, the next story is Trump announced additional $100 billion commitment by Apple to invest in supply chain in the U.S. Yes, so that a lot of money that Apple is moving their supply chain, chips, manufacturing, glass. They literally talked about Corning glass.
Yeah.
And they also are getting relief from tariffs because of this commitment.
Okay.
So I think a win all around, really. Win for Apple, win for the Trump administration, $100 million being invested.
And remember, he initially said no.
Yes, right.
He initially said no. And this gets to, and I think the president may be on to something here, which is you can subsidize people as much as your budget will allow through different programs. But really what you need to do is get their wages up, which means their economic options have to expand. Yeah. So our friend in Endicott, New York, in the story, in the
earlier story,
if she gets to work at an expanded Corning plant, that's a great thing. Now, the Tim Cook's argument early in this debate was, well, we don't have anybody in America to do that, which has been the story now for 30, 40 years. Okay, all this stuff went offshore because Americans wouldn't do it.
I think Americans can figure it out, though. It's not, we can.
Well, they never got a chance. Yeah. Nobody ever. Everybody. Wall Street's like, okay, we need to make our numbers. Let's buy. That thing from. It'll be designed in California, not made in California. And so that was how it worked out. But then I don't know that there was ever an opportunity. And I think it's a mistake to say we're that dumb, fat, and stupid, because I don't think we are.
Yeah, certainly. Americans can learn, especially with a tech-enabled manufacturing base.
Yeah.
I think there'll be good jobs.
Right. We're not, years and years and years ago, a manufacturing job was back-breaking labor for men. Now, what is it? It's these overhead robots that run on trolleys, and it's just magnificent, the kind of things that go on in manufacturing facilities for products that you can't, they're not T-shirts, you can't pack them up and ship them. They're automobiles, and you go down to any automobile plant in the Southeast. It's brilliant, stuff.
And they're good jobs.
And they're great jobs, and everybody's happy.
And so related to that, I think it's related to that.
It is related to that.
The Wall Street Journal had a story about cash windfall from Trump's tax laws starting to show up at big companies. So there is 100% acceleration of capital expenditure deducted from your taxes in the year you spend the money. Mm-hmm. And that has not been well publicized. I appreciate the Journal publicizing, but it's a big effect. The reason Apple, I think, is now willing to invest $100 billion.
It's one big, beautiful bill.
Whereas 4 months ago, they were not going to, is the one big, beautiful bill now gives them an immediate 100% match on the deduction. Mm-hmm. So they will get $100 billion tax deduction.
Right.
Which is a lot of incentive to and you can spend the money in a tax payment. Right. And that money never comes back, or you can put it into the ground in a producing asset and get tariff relief.
Which makes you
That's kind of an easy.
And that makes you more competitive.
Makes you more money
worldwide.
over time. Yeah.
Worldwide. So we're
going to see a lot of investment. We already have seen a lot of it, but it's going to be a lot of small business. A lot of businesses are going to invest because if you pay any taxes, and there's a lot of
most people do
physician groups. Yeah, I pay taxes. I think it's a big opportunity that people haven't fully appreciated yet, but over the next 6 months, I think we're going to see a lot of investment.
Yeah, and this is and I appreciate that people get super annoyed at Donald Trump and didn't vote for him and are looking for reasons why he's doing everything wrong. I understand and appreciate that, but he is coming at the case-shaped economy in a way that's very different than what we've seen for a very, very long time.
Yeah.
And it could get really, really exciting. And I think that's what the stock market's telling you.
Yeah. I mean, those are different things to me. The stock market will certainly, that's what the story is about. If you reduce taxes, like AT&T is expected to have $1.5 billion to $2 billion in cash savings this year. That's very positive for the AT&T stockholders.
Right.
Whether that flows through to new jobs, it certainly will flow to some new jobs. There's just a question of when and how fast. What I thought you were going to say, what I will say is, whether I voted for Trump or not, I'm taking the damn tax deduction.
Of course you are.
I mean, it's an opportunity to save money. I'm gonna do it.
Yeah.
And so we will get a lot of investment, and then hopefully that will result in construction jobs and then long-term jobs in 26.
It should. That's there's not many reasons that it won't.
Yeah.
There are some externalities that occur, but that is what drives economies, is investment.
Right.
And not only that, investment in productive. We politicians like to throw around investment a lot when it's not really investment.
Right.
But investment in productive activities.
Yeah. Okay, moving on to the venture capital section. So Positive Development is a company that just raised $51 million to continue. It's a Series C to continue with their autism, developmental relationship-based innovations. It's a new approach to treating autism. I hadn't really known much about it, but it's an important space. What do you think about this?
Yeah, no, I think there's this is just based on families that I know that have worked through this. It's lived in this weird space between psychiatry and psychology and a little bit of physical medicine. It's really, because it's difficult to define, right?
Yeah.
And it's difficult to understand, how it is, because there's a huge genetic component to it. So having capital focused on that problem, I think does two things. One, it might make the problem better, and two, it gives families more of a path to, all right, here's a solution that can work.
Yeah, and I don't know their model well, but I think it is more around kind of helping the child and the family in communication, problem solving, kind of like work with what they can do and give them, tools to be better.
Yeah. I think it'll be an interesting developments there.
Okay, then we have a few different cardiac companies raising money. So Ultromics raised $55 million to boost its AI ultrasound software. So they have software. It's coming out of the UK, but they do have 2 FDA clearances to take standard echocardiograms and detect heart failure and, be able to more carefully look at the ejection fraction.
Right.
What do you think of this story?
Well, the one thing I worry about is all the imaging people out there that are going to get trained for imaging. They're going to have to do some secular shifting, of their own. And that's the first thought, because imaging is very much open for AI.
Yeah. So we had one of our other guest experts, Rick Abramson, on, who is a radiologist and has really been forward-leaning on AI. And what he thinks is there's an opportunity for radiologists who have always been sort of the translator to other parts of medicine with new technology to step up and take a bigger role using AI to be able to get imaging intelligence more out there. But they need to learn AI, and maybe there won't be as many, but they could have a much bigger role. Maybe.
Right. And I think somebody put it to me the other day where it's like, AI isn't something that operates end to end. It's something that operates from the middle to the middle, with a human here and a human there, and then eliminates all the things that in the middle that, but I don't see, somebody's going to have to speak for whatever outputs there are from AI, whether in cardiology or radiology, whatever. Somebody has to answer for those results, and whether that and that's a litigation, legal liability question, but it's also just sort of a good practice question. And so how they approach it and how everybody approaches it, it's got to be recognizing that someone has to answer for this at the end of the day.
Yeah, and I think, I don't think AI is going to replace all radiologists. I think radiologists that really like AI and spend a lot of time with AI, radiologists that use AI effectively are the ones that are going to really prosper.
They could end up being very, 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 very good radiologists.
Yeah, that's right. Okay, and then we have sort of adjacent to venture capital, Heartflow pumps up an IPO. It's kind of interesting play on words. So they filed an S1. Heartflow filed an S1 to go public. They're going to sell a new public company in healthcare.
Yes.
And
awesome.
so they will be coming to market in the next month or so, a few weeks.
Yeah, this is we would like to see more of this. I think one of the goals of the Treasury Department and the SEC is to make the U.S. the home for capital formation, and we have a lot of work to do when it comes to our public equity market. So it's nice to see one of these.
Yeah, so exciting to see that. Okay, and then OpenAI backed a company called Chai, $70 million to do AI-driven drug discovery. So we've been talking about this a lot on the show.
Yeah.
There's an incredible opportunity to do a lot of the science in AI, in computer models before we go to the lab bench and test on animals. It's much more effective, it's faster.
Yeah.
I think it's going to be successful.
Yeah, one of the things that we've come to understand with the big Sarepta Duchenne muscular dystrophy dust up, where the company had to withdraw and then didn't have to withdraw, but it had 2 deaths from liver injury, and one of the problems with the data, the safe clinical data, but that disease progresses at different rates depending on who you are, and but one of the things that is going to be great as the FDA digitalizes its data is you can see things outside of the silos that they're stuck in. And so I was talking to a biotech investor, and she's like, yeah, one of the things we know, there's a liver injury that occurs with DMD, but if you have access to all those analog files at the FDA, you may have in the investigation of a liver drug, didn't have to do with DMD, right? You might, uncover things that we haven't been able to see as clearly as you can with AI, which is really kind of exciting. And I think this goes to the same idea where your AI-driven drug discovery, somebody is still going to have to answer it. It's still going to be a human being saying, "Yeah, that's my drug."
But they're going to go through millions of potential drugs
combinations,
in
molecules.
silica, and then they'll find the 3 that work and do testing on those in the lab. It's much more effective,
which speeds up your preclinical, pretty dramatically, and that can speed up your overall time to market.
Yeah. Okay, and then so we're now moving into policy. Kennedy came out this week and canceled nearly $500 million. This is in the New York Times in mRNA vaccine contracts. You have looked at this extensively in your public company work.
Yes.
Because this Moderna is almost exclusively mRNA.
That's all they are, mRNA.
So you knew this space well. What do you think of this policy?
Well, first, everybody needs to, I think, understand what the policy is. And the policy is that the federal government is withdrawing funding for the development of COVID vaccines on the mRNA platform. They are not withdrawing funding for mRNA research in other areas, and there's some related to bird flu, and it's not withdrawing research for vaccines generally. It's just specifically looking at $500 million that BARDA had been going to allocate for the development of mRNA vaccine, that using that platform for COVID vaccine.
So I thought it was all upper respiratory.
Well,
which I would think bird flu might be as well.
It might be, but it's not covered in this particular order. I don't think, because he says COVID-19. But the short response, the short answer to why he's doing this is it doesn't work.
Yeah,
and mRNA vaccines for COVID-19
they're not very effective.
Not very effective. It's and this is really again another topic that's been highly politicized. But this is a product quality question. This is a product consumer satisfaction question. Should we suggest insurance companies pay for something that doesn't work, and even demand it? Should we tell people, oh, you should get this when it doesn't work? No, we shouldn't. We shouldn't do that. And in a normal world, we would all conclude that's the case. But that's all he says.
Well, I would separate from. mRNA vaccines are much faster to get to market.
They are much faster, which is why that happened.
Right. So I would say, even with hindsight, at the public health crisis time, I'm not sure it was a bad idea to try to get a vaccine out to market. But now, 5 years after, we are not in a public health crisis, and we don't need the lesser vaccines. Well, we should focus on vaccines that actually work.
Yeah, and the original sin was unblinding all the COVID trials, so everybody had a COVID vaccine and we couldn't really see the controls at that point. We didn't have a control group at that point. And
who wanted to be in the control group?
Yeah, supposedly nobody wanted to be in the control group, but we eliminated the control group. So we didn't have any visibility into a lot of things that under normal circumstances we might have visibility into. And then we compounded that original sin by making sure, mandating it. Everybody's got to take it.
Yeah.
And people were like, okay, I got to go take this thing. And then they get sick. It's like, well, you made me go do this and I'm going to get sick. I got the COVID. I'm stupid. And that's a customer satisfaction issue.
Yeah. So, what I was trying to say is I give people a pass for the public health emergency. But now we're beyond that.
Well, way beyond.
And it's not the best science to make a vaccine.
And I would probably concede that it had a positive effect on a segment of the population that it was very likely to be to get sick and die, and that would be
during COVID.
During COVID,
if you have chronic disease, especially if you have COPD or something like that, it was very dangerous.
Yeah, but and of a certain age, but when you start saying, every kid needs it to go to college, that was crazy.
Yeah,
and
that's the fog of war or the fog of pandemic.
Well, that was a long fog.
Yeah,
if you ask me, but
yes. Hedgeye, your firm, has taught me this, but I want to cover it here. So the Wall Street Journal published Trump's tariff are questioned by the appeals court. Trump used, I'm not going to get the acronym right, a particular acronym.
Emergency authorization for tariffs.
In order to get wide-ranging power in the executive branch without having to go to Congress to issue tariffs, so that he could use them as a negotiating tool and go back and forth, as we've seen him change all the time. That doesn't work if you have to go through all the congressional approvals. And he lost the first court case.
Right.
And then now this is at the next level, the Court of Appeals. I don't know if Trump will lose again or win, but it won't matter. Either side is then going to appeal to the Supreme Court, which will be towards the end of the year. Your colleagues at Hedgeye have convinced me that he's likely to lose.
He is likely to lose.
Maybe
Paul
not 100%.
Our analyst on this feels pretty confident that he'll lose.
So we have a really interesting situation where Trump is working on signing trade deals with several countries. He signed Japan, signed Europe. He signed several. Based on his threatening tariffs or issuing tariffs, he's going to sign some more between now and when it gets to the Supreme Court. But then eventually it's going to be no longer in force. And so there's a period of time when he needs to sign these deals quickly, I think.
Right.
I don't know if people are watching this as much as they should be. It's going to be
and what I don't know is, okay, what's the outcome? All right, they go to the Supreme Court and it says, okay, you can't do emergency, you can't use emergency powers for this. Okay, fine, but you've already got a signed deal. Is that now null and void, or well, everybody agrees we should do this? Does that have to go to Congress? I don't know the answer to that. But
so let's just take Japan for an example. Is Japan going to say we were forced to sign this deal under a law that was not constitutional? I don't think they will.
I don't think they will either.
I think it's going to hold up.
But I don't know, is there a mechanism that has to go back to Congress? We'll have to get some clarity on that. But one of the, and Marcus actually taught me this. He grew up in New York, so he's been an observer of Donald Trump for a very long time. And that is, well, you got to remember, the guy was a real estate developer in New York City. And that means he dealt with two groups of people consistently. One is unions and the other is the mafia.
Yeah.
And so he looks at every problem as, in politics, we call it a mafia negotiation, where, you kill your dog, you kill somebody's dog, and then you debate, the next point of the negotiation.
Yeah.
And once
their mind focuses much more after their dog's been killed. Yeah.
And so once you understand, all right, it comes in like a ton of bricks, ignoring all of the niceties of negotiation in Washington, which almost always is a negotiation designed for the success of the political figure. So the political figure has to come out of the negotiation calling it a win. Which isn't much of a negotiation if you're a super savvy, political leader elsewhere. And this was, the Oslo treaties, for example, that Bill Clinton negotiated, which was a path to deal with the whole Israel-Palestinian thing. And he, walked around and said, look how great I am. I did this great thing, which was not bad. All right. Yeah. But everybody on the other side of the table knew all he needed was to be able to say, oh, look what I did. He didn't actually need results.
He didn't actually need it to deliver peace in the Mideast.
Correct. And and so this is a different approach, which is, I'm just going to break your knees and then we can talk some more.
I mean, so there have been, one of the things about the Trump administration is they are pretty transparent.
There's no question. It's just everybody's uncomfortable with it.
Yeah.
But
Latinx, I mean, they've said their game plan.
Yeah.
Trump comes out with like trying to establish anchoring at a crazy level, and then Latinx is negotiating the deal without Trump, and then he comes in at the end and like moves it around more. Yeah, the last second.
Yeah, it's just relative to this question. All right, what happens next? We
haven't signed a deal with Canada, so if. Or I don't mean
China. We have a lot of trees.
Pick the right. Pick who you want to talk about. But China, we haven't signed with China. We haven't signed with Canada. We haven't signed with Mexico.
It's important to note that the emergency powers are not used in the pharmaceutical and chip negotiations that we've been talking about.
Which actually are the probably ones that are national security.
They are national security. Yeah.
So, anyway, so we've talked about this enough, but it's a story that not everyone's following. I wanted to make sure people are aware of it. Okay, and then Trump signed an order allowing private assets into 401ks, and this is including private equity, which I care about because it includes real estate. Includes venture capital, real estate, cryptocurrency, and other assets. So it is exciting. I think that there's a lot of people that are not accredited and that they can invest in these alternative assets, and they've missed out.
Yeah, and we have to see. I have not read the order.
The details will matter.
About the accreditation issue. And one of the this is these unexpected things about politics. We learned in the last session of Congress, there was a lot of hearings about liberalizing the accredited investor rules, and interestingly, some of the biggest proponents of that were the Black Caucus. Because when you look at accreditation rules and you look at the size of 401ks, you're not usually talking about the local barber, in North Nashville. That's not typically who you're talking about. So you have this very uneven playing field, by virtue of regulation.
Yeah.
The flip side of this, and I'll be interested to see how they deal with it, is that there's a whole lot of snake oil getting sold, Some of it through publicly traded companies. We should add,
Right.
but there's how is that going to how are things going to be disclosed and people learn about these things is going to be a question. One in one bill in the House that was debated and passed last term, their response was, all right, if you're a registered investment advisor on your 401k, says you should invest in that. You become an accredited investor. So you've had a professional advising you on that. We all know that they are just looking for fees sometimes. So is that a good answer? I don't know, but at least one of the answers.
Yeah, I don't know. I think that, forever, the accreditation rules have been intended to protect people from losing their money in very risky assets. But also, I'm a venture capitalist, so I'm completely biased, but there are opportunities for individuals to learn about it and then get better upside and not take that much more risk if they have a portfolio of these things.
But, and if you're 27,
you have a time horizon.
You have a time horizon that's nearly, it's 60, 70 years long.
Right. Yeah, you'll be okay.
Yeah. It's I don't know how you create rules to keep people from being stupid. I've never figured that out. But I do know that most of the rules are heavily biased against the development of a capital base amongst people who weren't born with it, or weren't in highly paid, highly compensated industries.
Yeah. Okay, so moving into payers, Blue Shield of California, this is in Fierce Healthcare, they launched a new prescription price transparency tool for their members, which I think is great. I don't know much about this tool. Price check MyRx.
Dubious, totally dubious. The last people in the world that want transparency in your prescription drugs is your insurer.
I don't know about that. I don't. It depends on what they're.
They get too many kickbacks. I'm sorry. Giving you a chance to know, through an app, that makes sense. So you're less likely to abandon, the prescription.
Yeah.
That's a nice thing to have, I think. But yeah, this is to me not one of those things that's going to make people do what needs to be done, which is for people to go, I'm paying what?
Yeah. Or I could leave Blue Cross and go
somewhere
pay
else.
The cash price for less.
Right. Yes.
And that's the thing they might not say. Okay. Oscar Health, relatively small payer, missed estimates. They've been struggling. Their MLR went from 79 to 91.
Yeah, because they're in the Medicare Advantage space, and Medicare Advantage, and I have not gotten to the bottom of this, but they're all reporting MLRs in the high 80s, low 90s. And I think that the problem here is mispricing their plans, which I include benefits, added benefits in that, and they're going to have to change that, which is bad because that means premiums will go up.
That's right.
That's
they're going to increase premiums, and it's going to be hard on all the people.
It's a political problem. Okay, and then at the same time that they're doing that, standalone prescription drug plans, which are typically paired with freestanding Medicare, traditional Medicare, freestanding PDP plans with traditional Medicare, those are you're getting a lot of plan exits. People are getting out of the prescription drug standalone plan. So people are, if they want a prescription drug plan, they're getting forced into Medicare Advantage.
Interesting, because that's the only place to get it.
It's the only place to get it.
So if you have Medicare fee-for-service, in some parts of the country, it's difficult to find a Part D plan.
It's difficult. You don't want it. You don't need it. All you really want is to make sure you've got the drug benefit. But yeah, in parts of this country where a hospital is not going to join a Medicare Advantage network because they're the only hospital in 3 counties, that's going to be a problem. So you're headed towards a consumer choice problem. Progressive wing of the party is going to go, I don't like that because that degrades Medicare Advantage.
Yes.
Medicare fee-for-service.
Right.
Sorry.
but Medicare Advantage is increasing their prices.
And Medicare Advantage, So you're screwed either way.
Hit from both sides, right?
Yeah.
Right. And then they also, the more interesting part, I mean, I knew they were suffering and going to miss earnings, but then they also signed a deal with Hy-Vee, which is a grocery store, for an ICHRA plan. Marcus and I have been tracking this ICHRA, which is a individual, it's a way to give employees at Hy-Vee, which is a grocery store, a pool of money that then they can, on a their own choice basis, buy different pieces of insurance that they would like.
Yeah, and this is an effort with ICHRA plans to decentralize it, and so your employer has other options. Your employer now has an option of running his own program, running a program with a stop loss plan, and it becomes increasingly expensive. And ICHRA is a way to get to another option, and it's particularly
really, I think of it as moving. It's a step towards, like in retirement, defined contribution versus defined benefit.
That's where
it's headed.
That's where it's supposed to head. Yes, and this is one step. The ICHRA plans are small. There are not very many of them. I haven't seen enough evidence that they're catching on, but. I mean, you give people few choices, and as I've said many times, I don't know that health insurance is a particularly good use of anybody's money nowadays.
I'm going to leave that one. So, UnitedHealthcare and Amedisys today announced a deal that they got a settlement with the DOJ after a couple years of debating it for their acquisition. So the acquisition can go forward. Amedisys has to sell off 164
in 19 states
home health hospice locations across 19 states. That is a huge number of locations to sell off. I think it's a record, not maybe in the value. They represent over $500 million in annual revenue. But the volume, the number of sites, DOJ has never mandated that many before.
Yeah. This is one of those things that's probably too late on the trend. You know, the home health is a very inefficient model, you know, for healthcare, because people got to drive from point A to point B. Same, unless
but that's where the patients are.
That's where they are, and the whole idea was we'll have this value-based care and we won't institutionalize them. But it's a very inefficient model, and what UnitedHealth Group has been using the model for are home visits, for home health aides to come into the home and do a healthcare assessment, so that UnitedHealth gets in their mind, proper risk scoring of that particular individual. There is a ton of evidence to suggest that those home health nurses are being a bit aggressive in how they code diagnoses, which end up in risk scores, which means UnitedHealth Group gets paid more. So
I agree with all of that. I think Amedisys does a lot. I mean, they're here in town. They do a lot of visits that have nothing to do with the risk score.
But that's why
they do have a piece of that.
But that's why UnitedHealth bought them, and that was to cover more territory, to have more home health aides. That was the whole reason to have that.
Yeah,
have that additional capacity.
Yeah. So they made it through the process of an extended negotiation over several years, but they got it done, or they were close to getting it done.
I wonder if they wish they just hadn't, but we'll see.
Okay, good story from Healthcare Dive here. Hinge Health, which went public about 3 or 4 months ago, they had their first earnings call, and they did really well, beat expectations. I mean, you kind of expect this on the first one. They should have had it kind of lined up for the first one.
Yeah.
But still, good to see them do well.
Yeah.
Okay, and then Hims and Hers, which has been just a volatile stock, up, down, up, down. They fell 12%, missing revenue, and they are expanding into lab testing and longevity.
Yeah,
which was kind of
longevity is a big play. That's a lot. You're going to hear a lot about that over the next.
A lot of people are interested in longevity. I don't know how much volume there is across the country. It's more of a wealthy person thing.
Yeah, it's and the transhumanists, who just don't want don't want to die.
Right.
I'm sorry to break it to you, but the Hims is interesting for this reason. They are obviously pushing the envelope when it comes to compounding the GLP-1 drugs. I'm not going to suggest that they're violating the law. They're pushing it as far as they think they can go, and so they're doing
this like grassroots.
They have
public perception as at least a piece of that strategy.
It's a huge piece of that strategy. Meanwhile, off on the side, the president of the United States is telling 17 drug companies, look, if you need help getting a DTC, direct-to-consumer model set up for your branded drugs or your new entrant drugs, we're here to help. We want to know what you need. And so what could be going on here with Hims is that we're actually starting to break the model, and the model is drug company develops a drug, frequently keeping in mind what the pharmacy benefit manager is going to do with respect to formulary placement. So we're going to spend a bunch of money, we're going to price this drug, and we're going to do it with an eye towards what Caremark and et cetera are going to say for their formulary placement, which is a distortion from the beginning, right?
Yeah.
All right. Then once you've got that formulary placement, then you use your sales channels, and that includes direct consumer advertising,
drive adoption,
to drive
sales,
to drive adoption. And the more desirable your drug is, the more negotiation that goes on between you and the pharmacy benefit manager, the more distorted the price gets. And certainly when you compare that, if you have an Eliquis prescription and Pfizer opens up a channel for you to send your script, which now are automated, right? They're all automated. Send your script to some pharmacy and they'll send you the direct consumer price. They get it out of the PBM universe. That frankly is the only hope I can think of for big biopharma. And I think Hims will end up being the forerunner of that. Now, we're not talking about branded drugs with Hims. We're talking about lifestyle type things, but there's no doubting what they're doing here, which they're building a constituency of people who are done with all that. They're done with the pharmacy. It's closed half the time now anyway. They're done. They want what they want, and they get everything else, dropped on their doorstep. Why not this? That's And
I think that's right. I mean, I think it's the way that consumers want to engage in healthcare. It's Hims and Hers is telemedicine mostly,
right?
And they solve your problem quickly,
right?
You want a GLP-1, and they get it to you,
right?
They are more for, you can see in the ad, if you're watching on the video, that it's targeted at younger people. This is not a lot of Medicare folks going to Hims.
Yeah.
Who, they have a certain set of things, but it's a limited set, and weight loss is one of them.
Right. Yeah. But it wouldn't take much to make that's other things, especially when you have all this loss of exclusivity going on in biopharma. So things are moving into the generic.
Yeah, they're moving off patent.
They're moving off patent.
Right.
So that.
But Hims is not worried about the patent.
Once things move off patent, they really don't have to worry about it.
Right. Okay. Then Pfizer, interestingly, raised their profit outlook, even though they seem to be
they've done
struggling.
A lot of decent amount of cost cutting here. Pfizer is, and they had a decent.
You've researched Pfizer a lot, I know.
And a lot of their revenue came in from the COVID-19 vaccinations that as we've discussed, the federal government has acknowledged they don't work particularly well, and
because theirs is an mRNA vaccine.
Yes,
too.
They have an mRNA, and I don't think they can run away from that fast enough. They depend on it because it's pretty significant part of their revenue model, while they try and backfill some branded drugs.
Yeah,
and that's turning out to be pretty tough. So
Yeah, their pipeline is not that strong.
not
as
at
far
all.
as
And the hope for Pfizer and these other drug companies is that direct-to-consumer channel I was just talking about, where, if they can figure out a way, with the help of the White House, to fill prescriptions and get those prescriptions delivered to people who, have an Eliquis prescription or whatever, and they cut out all of that excess of pharmacy benefit managers and wholesalers and whatever. They get their prices into the universe of like actual reflection of what the price is. That's a fairly significant gain for them. And then they can build brand around that and do some other things.
Yeah. And so I think
that's their hope.
Well, we'll have Noah first. So we're going to get to Lilly in a second, which I was trying to jump to. But before we get there, Novo Nordisk, they pre-announced last week. Marcus and I talked about this last week. Their sales for Wegovy grew 67% year over year. So it's growing incredibly fast, even though they got rid of their new CEO, and they pre-announced that they were going to miss earnings.
Right.
So it's sort of a tale of two things. The Wegovy is still doing really well. Maybe not as well as people had hoped, but 67% is pretty good growth.
Yeah, it's pretty good growth. The problem with the GLP-1 drugs is the price, and that's the reason they're compounders come after their business.
Right.
That's the reason the White House it's the price. They're charging too much. And they don't want to do anything different, at least at this point. But they're still making drugs. It's very exciting what Tim's is doing, and it's very controversial. It's still not very big, relative to the whole market.
Yeah. Compounding, it doesn't scale the same way that mass producing Wegovy.
No, having a whole
does.
manufacturing, facility. It's different than having a compounding pharmacy.
Yeah. Okay, so Lilly has been early. They had Lilly Direct. I think it was one of the first going direct to consumer. They're an American company, one of the best pharmaceuticals in my mind. They had an announcement that their weight loss pill, so it's a GLP-1 pill form, has shown really good clinical trials results. It's not yet approved, but they're applying with these results.
Yeah, and I think once you get into pill form, you really have first of all, it's harder to compound.
Yeah, right.
So
harder to compound, much more. Many more people will take a pill than will get themselves a shot.
But you also have an expansion of the market. That's right.
Yeah.
Although if the question is, do I save $500 or $600 a month with an injection? Oh,
Yeah. Well, Lilly has that too.
Yeah.
Okay, getting into the new section about health and us. 7 ways, this is in the Wall Street Journal, 7 ways to track your risk of falling and prevent injury. So falling and breaking your hip is the most common way to end your life.
Yes.
And a lot of the preventions, and people should read this Wall Street Journal, but they are pretty basic things like the area rugs, the throw rugs.
Yeah, get rid of those.
Get rid of. You need to have good lighting.
Right.
You need to watch your blood pressure so you don't get dizzy.
Right.
Pretty basic things. And then I'm going to add, you need to work on your sort of core stabilizing muscles and balance before you are at a place where you're falling.
Yeah.
Because it's hard you need to do that over many, many years.
This is one of the trends that I really like seeing in healthcare. It's mostly coming out of the wellness group, which is now sort of, and you see this with HIMSS kind of merging with the medical world. But also, you've talked to a concierge doc, he'll say the same thing, which is, the goal here should be whatever was use your actuarial tables, whatever was going to, make you ill at 60. Let's see if we can't move that to 65.
Yeah.
And then once we get to 60, let's make sure we get that to 70. And so you just keep pushing out these problems, and you do that starting when you're healthy. That's a very, and you associate that message with the Make America Healthy Again movement and some other things. And one of the, we've been just lamenting the healthcare cost curve and all of the medical spend. But when you teach people how to be healthy, they're gonna they might consume less healthcare.
Yeah, I think they would, and they'd also have a longer health span and maybe be happier or have more productivity.
Yeah. So there's a lot of ways to bend the healthcare curve without cutting reimbursement, and one of them is cutting demand. And that's that. So I think this is a trend to watch for quite some years to come.
Yeah. Okay, getting into AI. We have one AI health story, which is, I think it's Lena, maybe. I'm not sure how to pronounce it. It's a Redesign Health company, and they have an AI-driven approach to preventing heart failure readmission. And we were talking about this ahead of time. They use an AI system combined with high-touch care teams, which is an interesting phrase. I think I used to call those extenders.
Yeah.
I think that's what they are. And they're using AI to help those teams be more effective and sort of wrap around the patient with much more kind of timely messages and applicable messages.
Yeah, and this company is interesting because, first of all, there's money in it, right? If you reduce the readmission rate for a hospital, they're eligible for different, quality bonuses. Then the second interesting thing about this is that we've had these requirements for information from hospitals to deliver to CMS that are related to readmissions. So you got like pretty vast pools of data to tell you, all right, here's what's
and it's pretty, not great results for now. 40% of heart patients are readmitted within 90 days. Yeah. And that's exactly what they're going after.
Yeah, and there's actually gold in those hills, as we might say.
Right. McKinsey is AI is coming for consultants in the Wall Street Journal. Inside McKinsey, this is an existential risk.
I'm glad somebody's coming for consultants.
yeah. McKinsey, I think McKinsey will do okay. But they are under existential risk, I guess. AI is a topic at every McKinsey board meeting. They have many thousands of AI agents in the McKinsey platform, and they're deploying agents to help with making slides and help with writing. And we were talking earlier, I think it probably, this was your comment, but it helps that the first year McKinsey new employee be much more effective, much more productive.
Right. And so that maybe means you need less people because a first year is going to be less productive than a third year. Maybe that means you need less people. Either that or you expand your business. We'll see. And I think that I was listening to someone say, everybody's worried about AI taking jobs. What they haven't, really talked about is the jobs they're taking are these soulless white collar jobs, that where it's just mind numbing, stupid, repetitious work. Like an analyst on an investment banking analyst on Wall Street, doing the 2-year rotation that they traditionally did to put on your resume and get you into business school, and then you're off to the races, and you work 18-hour days, 12-hour days, and it's a lot of it's a computer could do. It's just computers weren't sophisticated.
A lot of it is painful and monotonous.
Right.
And I think it also is, it's one of the best ways to learn about lots of different industries and how business is financed.
It is.
And learn very quickly. And if we take that away, the pipeline of talent, I think, has changed somehow.
Yeah.
I don't exactly know the impact, but what I was just looking at is the most used agent that they have is one that helps employees write in what they call the McKinsey tone of voice. And I think there probably were hours and hours of times when the partner or a senior person would sort of go over the written piece and say, well, no, we need to change that and that and that. And they're sort of teaching the other human the McKinsey tone of voice. If we go to a bot that does that automatically. I guess my question is, does anyone learn how to write in the McKinsey tone of voice, or you just not even worry about it? You just sort of put in anything.
Maybe you don't worry about it.
Maybe you don't need to.
I don't know. I mean, I've personally stuck some of my stuff through. Somebody told me to send that through ChatGPT, and my response to that was, I don't like that.
Yeah. And so I don't know. We'll see. But McKinsey sort of has traded on having, really strong, intelligent people advising. Right. And if intelligence goes to be a commodity, I don't know what McKinsey's going to do. So,
well, and they did spend about 25 years saying outsource it to China, which the president is now reversing.
Right. Yes. Okay, it was a big week for OpenAI. We have 3 stories about OpenAI, and we'll try to do them fairly quickly. So 2 days ago, they released 2 open source models, right, where you can download the entire model, the weights and everything. They don't have the training data, but they do have the full weights on many open source platforms. And then you can play with it. You can change the weights. There's one that you can put on your laptop and just use at home. They haven't, even though it's called OpenAI, they haven't opened sourced any of their code since GPT-2, which was maybe 4 or 5 years ago. And so I think it's great to have one of the leading American AI companies open source actually 2 really strong models.
That open source is better for a lot of things. Productivity, you think about it, the first open source was probably standardization of parts, in the late 19th century, where, every cog cogs are going to be this big, this big, this big. They're going to have this many teeth. Otherwise nothing's going to work, and your thing's not going to work with this thing. And and so what we know about open source, whether that's standardization of parts or Chat GPT, is it accelerates innovation and productivity.
Yeah,
because people are working in a standardized environment, or maybe standardization isn't exactly that.
Yeah, I think of it as like it raises the floor of, what a startup could use.
Right.
You can download this model for free and run it yourself on your laptop, and that's a good thing. That means that startups around the world now have access to a really high quality AI system that's completely free to run. Right. Now, you have to pay for the electricity and the compute and things, but the actual core software is free.
Right.
Prior to this, the best models were Chinese made. And I think it's good that America is starting to have open source models.
Well, yeah. And you cannot, for this kind of function, you can't have that kind of international dependency, especially if it becomes, it's probably not going to matter that it's, all up in McKinsey, but, when you start deploying these things into more sensitive areas, it matters. And you can't have that international dependence, I don't think.
Okay. And then the next story from them, OpenAI released GPT-5 today, which has been their long anticipated. This is their new cutting edge frontier model. It came out today, so we don't have that much information about it. I have watched 2 reviews from 2 people that I trust that got it early, and then they released their reviews today. And they're very complimentary. It's the best model in the world, has beaten a lot of benchmarks. Importantly, they now have changed the standard where previous to this, there'd be like a reasoning model and an inference model and a video model. There are all these different versions, and OpenAI has changed all that with GPT-5. There's just one model. It handles anything you need.
Okay.
And it manages itself if it needs to reason or not.
Okay. Based
on what you're asking it, which I think is how it should be. I mean, why does the user have to decide whether they need reasoning or not? It's much easier just to use one model.
Yeah, I would say you're talking to somebody who wouldn't know the difference. So, but I do like this article from Axios where it says you get instant access to PhD level expert I don't know that that's
That's how Sam Altman marketed it. So when he announced it live on YouTube or somewhere,
there's a lot of crap in PhD level research.
yeah, yes,
As there's a lot of crap in there.
yeah,
especially in like nutrition science, drug development, those kinds of things.
yeah. Well, I think his point was that I'm not going to get his quote right, so someone will be in the comments, but GPT-3, he said, was like a high school level intelligence.
Okay.
GPT-4 was sort of a college graduate.
Oh, and now we're at
and
PhD.
GPT-5 is PhD.
Okay.
He was more like relative to other models.
Okay, all right.
Not necessarily that a PhD level science is good or bad, just it's more, it's higher.
I got it. Okay. All right. Well,
and then the most interesting thing that they did this week, so this is all this week, they also announced a huge partnership with the U.S. government, which I think has been in making for a while, where they're going to give entire agencies use of their models for $1 a year, which is pretty smart, I think, because it gets them sort of embedded as the standard, or at least a very cost-effective way to get into the U.S. government.
We'll have to see what the standards they're having to meet there, because I think it was a Chat GPT model a few years ago where the federal government said to people on the Hill and so forth, do not use that. We can't secure against that. Especially when you're talking about, sensitive stuff.
Yeah, I think that has changed with the Trump administration.
Oh, has it? Okay.
And OpenAI has been working with the Defense Department and sensitive areas, but I think this is for any federal agency.
Okay, all right. That'll be. We'll see how that goes.
I won't be surprised if Anthropic and Google and other people match it. I mean, I think it is kind of a no-brainer to do. Okay, and then Bloomberg had a story, dumb, in quotes, AI bots collude to rig markets, Wharton research finds. So these researchers at Wharton ran trading simulations with AI bots, and these were not, Chat GPT 5. These were very simple, relatively simple bots, and they let them, to their own devices with a profit motive. And they consistently were colluding with one another.
I'm shocked.
Not communicating, but they just would infer.
Yeah.
Oh, this other bot is trading this way, so we can both make money if I do this, as long as the other
I would
one.
argue we didn't need Wharton to tell us that. Pretty sure that's been going on for a while.
Well, so do you think it's going on now, with humans or with AI traders, or both?
With automated trading systems, you can see this thing do that thing, and therefore you have a system for doing that thing too. Or if someone is going long, you can go short and neutralize the market. I suspect it's already a big part of. Yeah. Some trading strategies.
Yeah, so it's interesting. I guess the ability to ingest all this data from the market, the AI bots can tell what the other strategy is,
right,
without having to communicate. Where humans, where we have regulators, we're said, Vic cannot email Emily with inside information,
right,
and you don't have enough ability to look at all of my activities and know what I'm doing.
Right.
But the bots can do that.
Yeah. And one of the things about Wall Street that's different from a lot of parts of the economy is that we've had data that you can ingest for quite some time,
because
volume.
It's more standardized.
Yeah. It's standardized volume, price, velocity. We have all these tools, and we have scraping tools, and we have data ingesting from the federal government, all of it, and I expect that we probably also have trading strategies that do if this thing happens, that thing happens, kind of collusion kind of thing. Because, they don't need to talk to each other. They just need to know, that particular trade went through there, and that means this, and I can, follow.
At some level, that was the entire high-frequency trading concept. Like, they found little trends that consistently would pay out small amounts for short periods of time. And they didn't last forever, but they would last for 6 months, 12 months at a time, and you can make a decent amount of money before
the thing to
market
remember
moved on.
about Wall Street is it's constantly iterating, right?
Yeah, right. That only works for a period of time, and then it stops.
And then you start something.
Once too many people know about it, it stops
then
working.
you start something. And then you turn to the next thing, and the next thing, the next thing after that.
Okay, and then we're going to end with, this is an opinion piece out of the New York Times. The era of AI propaganda has arrived, and America must act. And it's two Vanderbilt researchers that specialize in national and international security, and they are documenting a Chinese company called Galaxy, I guess.
Galaxy.
And I wanted people just to become aware of this. Galaxy interacts with thousands of individuals on social media, and it builds a relationship with you, and then tries to move your opinion slightly in its favor, in whatever concept it's trying to go. It has not been seen in the U.S. yet. It's mostly been in Hong Kong and Taiwan, in the Asia countries. But these two Vanderbilt researchers are saying that they expect it to come to the U.S. and that we're not prepared, which I think I agree with.
No, I think that's probably true, but I don't think it's going to last much longer. As we got into the information age, starting with broadcast television, what the early Walter Cronkite, Edward R. Murrow, what they were selling you was trust. I saw this thing. I looked at this thing. I talked to these people, and you can believe what I say is true. That whole system began to break down, with the internet age, where information is like, it's everywhere. Right?
And there was some kind of, you're going to know what it is. There was some regulation that changed news. Didn't have to be balanced. At some, maybe 1995, 1998, somewhere in there.
I think it was in the early 90s, but there was if you do say one thing or covered one thing for a political party, you had to give the other view of it, and that went away. And I don't know that it was that effective, but what happened with the information ecosystem is it went from little bit of less information, but you can trust me because I'm going to give you information that you need and want, and it is accurate, to information everywhere, so it just became so cheap and worthless. And I was giving you the analogy the other day, print media, of course, it went from being expensive, over several centuries to really cheap and now non-existent. Where my grandmother would go to the grocery aisle, and there was always the National Enquirer, with the stories about two-headed babies, and Elvis was not really dead, and and things like that. And so there's a whole, in that ecosystem of information, there's a whole lot of two-headed babies and alien abductions, and Elvis Presley is still alive. And there are people like my grandmother who may or may not think Elvis Presley is still alive.
Yeah, but it's fun to read it and laugh about it.
It's fun to read it and talk about it. But I think the biggest kind of problem we have is that you knew that was entertainment. And there's probably a lot of people that if they encountered the Galaxy bot would know it was a bot but still be entertained by it and enjoy the conversation, I guess. But what is the trick here is going to be all those people in the grocery aisle that didn't pick up the National Enquirer, they picked up, the New York Times or, the Washington Post, which are now terrible examples, but still, those people are going to have to maintain their critical thinking facilities, because there's a whole pool of people who are not, either because they like to be entertained or because they can't really tell the difference. And then there's this other pool of people who are smart enough to go, I just don't really buy what you're selling, kind of thing. And don't forget, never forget, and I keep reminding people this, when it comes to things like AI and the information ecosystem, there is a giant chunk of people that don't touch that all day long.
Mm-hmm.
They're plumbers, carpenters,
a nurse,
a lifeguard.
Doctor.
Yeah. They don't, they're not even in that loop. And they're going to be shocked when the aliens land.
Yeah. Yes. And so with that, we will end this session. Emily, thanks for doing this. Very good. I think there's a lot, like every week, there's a lot of news coming at all of us very quickly.
Yeah.
Just how do you keep up with everything all day? What is there something you read or another podcast you listen to, or people get tired of hearing me all the time? What do you go to for information?
Oh gosh, you're not gonna you probably aren't gonna like this. So I am a heavy reader. And so my mission with news flow is to place it in context, not just the near-term context, because I think this is a mistake. But to place it in a historical context, And so when something happens, the first news question I have is, okay, when could that have happened before? So my main source of information is reading books.
Actual, books that are much longer form.
Much longer.
Than,
so
not even a news article, but forget it, social media post that's really short and ethereal.
Right. And then the second thing I try and do is stick with reading the trade publications, although that's gotten really hard, where I don't need a lecture on Donald Trump every time I read. He's a known quantity to me, and there's no additional information I get from people griping about Donald Trump. So the trade magazines tend to be
because they'll dive more into healthcare policy.
Yeah, they're talking to somebody like me.
Yeah.
So Inside Health Policy is a Hill rag, which is pretty good, which I enjoy. X, which I should not look at it because there's a lot of two-headed babies and dead Elvises on X. But when there's news is moving, it is probably the best.
For breaking news, I think X is
for breaking news. It's outstanding. If you curate your feed for reporters that you trust and know and like, it's pretty good information.
I've started getting into Substack, where you get actual, individual people that I like.
Substack is actually you will look back on it as the golden age of media, because you have a lot of people in there were expelled from traditional media, and are just making
or they wanted to do the journalistic writing that they wanted to do, and their editor or their publisher were trying to force them to do something else.
Right? Exactly. I subscribe to Racket News, which is a former Rolling Stone writer. He couldn't be more left of center. He's a socialist, but he's a great writer, and he follows national security issues, really well. And so that's how you almost have to curate your own sources. You have to. You think what I think of it as instead of picking up the New York Times and getting everything I need to know, I have to pick up Substack and and put it together, and that's how think about it. And that's what relative to this last article, that's really what most people need to do, because if the pharmaceutical industry cannot do direct consumer advertising via to cable news will it'll close down. Yeah, it'll go the way of a number of things.
That's interesting. Because if you watch a Fox or CNN, either side, almost all the ads are pharmaceuticals.
Exactly. Yeah. And which means that they can't report on a very important U.S. industry, which is pharmaceutical, because they don't want to be dragged into the editor's office, because he got dragged into the publisher's office and to talk about these things. And these things matter, when it comes to information. It really matters. And that is, I think, unappreciated by a lot of people. Linear media lasted way too long. It needed to go about 10 years ago. And I think it's going to be gone before the, probably 2028.
Yeah. Yeah. I think as traditional media or linear media has deteriorated, I think kind of grassroots things like podcasts, like this podcast, and Substack, where there's an individual writing, have really proliferated. But it takes a lot of work. You have to find a podcast or find the Substack that you resonate with.
Yeah, and you have and then you have like publications like the Free Press that are emerging, and you have these are things that are they're remaking media. It's just that there are a whole lot of people that are tethered to a very traditional way of consuming media,
right?
Which at least for healthcare, I can't speak for every part of the economy, but at least for healthcare it's not helpful to me.
It's not really. There's not much in traditional media about healthcare that's new or interesting.
Yeah, most of it's regurgitated stories, and they follow the same storyline, and nobody wants to think about it any differently. So it's not valuable to me. It may be valuable to others, but it's not valuable to me.
Okay, well, Emily, thanks for filling in.
Happy to do it.
Excited to have you on here.
Glad to do it. Glad Marcus is getting good rest.
Yes. Thanks, everyone, for listening. Marcus will be back next week, and we will have a whole slot of stories again, I'm sure.